FOMC. Everybody's talking about FOMC, but how exactly do you trade FOMC? How do you trade FOMC? How do you stay disciplined to not follow the first move and to catch a fake out? How do you do this? So here at this video, I'm kind of going to walk you through on how I would trade FOMC and how I build up different scenarios leading up to me trading FOMC. So now, first things first. If you're not subscribed to my YouTube channel, go ahead and subscribe. It's just one button away. So first things first, right? We're gonna, go with the news. The market's expecting a 75 BPS. June, we had a 75 BPS. At this point, pretty much priced in, which is why we've been having these bear rallies. But we can't rule out the thought that there could be 100 BPS. Remember, this is a Fed's decision here. So we can't rule out the fact that they might hit 100 BPS. So what that means is that if we do hit 100 BPS, very bearish. If we remain around 75 BPS, feel like it's mixed feelings, feel like we don't know yet, go up or down, that's where we go to the technical aspect of it. But if we do get 75 BPS or lower, say we get a 50, even a 25, you can't rule out a 25 either. Very positive news. Bulls will start, sending the positions all-time high. As you guys can see, we're closer to highs than we are to lows. So now, ultimately, what I want to show you is, again, we have these OWS levels that we kind of use as pivots. And these green lines here are my resistance and my supports. So now these pivot areas, they're in the same ranges as my, or some of them are even the same range as my areas of interest. But how I like to trade this is I like to see confirmation. I'm automatically going to see, okay, we broke out of this resistance area. Since we broke out of the resistance area, what's the probability we'll come back up here? What's the probability? Or trade here, pull back here, and buyers start accumulating, bring it upwards. So again, that's how I trade FOMC. I wait. Remember, patience is very important, especially if you guys are trading the SPX contracts you guys like trading. Those contracts really do make money. Those contracts go from like $300 to $1,500, $2,000, like crazy. Like, I'm not even bullshitting. We have over hundreds of members that do this on a daily. So ask yourself, where's level of interest? So now this right here, because we are looking at the ES1 right here, is essentially the S&P. I'll make a follow-up video. You guys comment on the section if you guys want me to make a follow-up video explaining the ES versus the S&P. Well, I don't think I should make a follow-up video because I would just explain it to you here, where I'm telling you guys that it's as simple to know that the ES is just the S&P. That's it. That's why there's no follow-up video, because the ES is the S&P. No follow-up video. I just explained to you ES, S&P. I just like to see the ES because with the ES I get overnight lows, and it kind of gives me a direction towards where the markets follow. Where SPX only gives me the pre-market data. Sometimes. Yeah, it gives me, with SPY, it gives me pre-market data with SPY. Again, SPY, SPX, ES, all trade in the same direction. So now, tomorrow I'm going to see how price reacts leading up to FOMC. First thing you should see, when the market opened, are we closer to 3966? Or are we closer down to this area of support, which is the 3938 zone? Ultimately, we want to see this level, 3915. Professional traders only trade out here or down here. They don't trade this. To them, this is nonsense. There's no pattern being developed. And getting to this point, we'll find acceleration here, or we'll find acceleration here, or even here. But that's when we ask ourselves, once we get to that point, we use all of our different strategies. We use different, we analyze the tape. We see if bids or ask are weakening. If bids or the ask are weakening or accelerating, go, simultaneously. You're asking yourself, okay, cool, there's a lot of buyers coming in here. We're breaking out resistance. We're going towards positive traction. Again, say, for example, we had this MACD. We went towards positive traction. Again, let me start to build up my long here. Very, 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 very quick. But all of a sudden, sellers get here. They don't like this price. It's starting to, form here. That's when you start to, apply yourself and develop risk management. If you can't Like FOMC, you catch a great move, right? But don't, are you a trader or are you a gambler? So the first thing you should ask yourself, are you a trader or are you a gambler? If I'm a trader, I'm going to wait for confirmation. I'm going to wait for the consolidation to finish. As you can see, today when I signaled my puts on the chat, which was right here, I did catch all this. I didn't trade this, and I said this in live trading. I was looking at this all night. Shouldn't be trading this. This is just the range. This is consolidation. It's coiling. I didn't even trade this. I didn't even trade this. This first confirmation right here gave me, okay, we're getting bought up. But right here, we start getting sold off, and the EMAs prove. And the MACDs, fall through to the negative traction. And again, I was able to catch my SPY puts up here. First, excuse me, down here. As you guys can see, we got bought up, but the moment that we broke back down below the low, Monday low level, boom. And all this level was profits and resulted in the contract going 70% profit. FOMC, I'm going to trade it the same exact way. And again, if you guys are trying to catch a big move, say you guys are trading with small accounts, don't use all of it. Use it in increments. Slowly scale into it. Because the market's either going to go here or it's going to go down here. And that's when we analyze more data to be able to see where there's areas of interest. Down here, 3914, we break below that. We watch this level, 3889. Again, I will rule all these levels because they are very possible. FOMC sometimes gives you, 100 points to the upside or 100 points to the downside. Very volatile. So again, don't get caught up in the wrong direction. If you do, learn to cut it. But other than that, that is exactly how I would trade FOMC. Again, we still have some more overnight action to be done. But once we get here, I'll just look for areas where buyers get exhausted and take advantage of, following through a downtrend. And once you've taken your profits, that's when you could play, right? Because I see trading as a job. It's 100% a job. Once I can play around with profits, boom, I'll let them, I'll overextend them. So for example, I buy a SPX put here. I bought it for $300 and then we come back down here. And the contract's worth $3,000. If I bought 10 of them, I'm trimming 5, 3, and then those last two runners, now that $600 turned into a massive amount of profit within that time frame gives me my time for runners. But essentially, that's within my means. If if you want to trade SPY, the contracts cost $30, $50. Buy 10, that's $300 to $500, and you do that same method. You trim it as you go. Once you saw either exhaustion or buyers starting to step in. Pretty straightforward. Hope you guys do enjoy. We'll see, if FOMC, decides with their overall decision. I do trade live every morning on my Discord channel, 6:30 a.m. Pacific Standard Time. Pretty cool. We have over 1,000 active traders that essentially take this seriously. They take the trading career seriously, and they focus on the obvious. And they focus less on foreseeing and more on the obvious. Like what's obvious, what's holding, what's not holding. Where are areas that we're breaking support? How's the VXX looking? We're asking ourselves all these questions at once. Trading is just putting one puzzle together. That being said, thank you guys. I hope you guys subscribe to the YouTube channel.